There is a common viral promise. If you pair AI automation with a high payout finance niche, you can essentially print money with a faceless channel. The math is real. Standard gaming channels might earn $3 per thousand views, while premium finance niches command 20. But those premium bars hide significant risks: aggressive policy sweeps, revenue volatility, and federal legal liability. Platform guidelines now focus heavily on what is called inauthentic content. When a channel relies on mass-produced templates with zero original narrative or human oversight, it risks being flagged as repetitive and losing its monetization entirely. You also have to factor in the instability of the AdSense program. Payouts can shift dramatically based on advertiser seasons and viewer location, making a views-only income stream highly unpredictable. This creates a specific hurdle for new creators. You need a model that scales efficiently without being flagged as low quality, and you have to generate revenue without crossing into illegal financial advising. Treating a channel as a short-term viral gamble is a recipe for a quick burnout. Lasting success requires shifting the focus toward building a structured, legally compliant media operation. Your first major decision is purely physical. Will you show your face on camera or stay behind the scenes? A faceless asset-first workflow allows for maximum speed. By using stock footage and voiceovers, you can treat video creation like an assembly line, delegating the work to a team and scaling your output as fast as you can edit. Plotting scale against trust, a purely faceless channel sits in the high-scale, low-trust corner. But the hybrid model, showing your face for a third of the video, provides connection and authority. This credibility lets you move beyond ad revenue to sell high-value products. The downside of this hybrid approach is the bottleneck. Your production speed is tied to your physical availability and sitting in front of a camera. Your choice of format determines your business ceiling. You are either building a faceless machine with infinite reach or a personality brand with monetizable trust. Once the production is set, you have to look at the money. For most new creators, relying solely on AdSense is a mistake. AdSense revenue is entirely dependent on the algorithm. If your views dip for a month, your income vanishes. It leaves you with zero margin for error. A much more resilient approach is income stacking, designing your channel to extract higher revenue from a smaller, more specific audience. This scorecard reveals the difference. AdSense requires massive scale for thin margins. Compare that to done-for-you digital templates, which solve direct problems at a high margin. You can then stack affiliate links or private communities, increasing the value of every single viewer. This requires a shift in how you write your scripts. You aren't chasing general virality anymore. You are building specific funnels for specific problems. Financial freedom on the platform isn't about hitting the viral jackpot. It's about building a backend that can support a business on a few thousand dedicated viewers, rather than millions of casual ones. Even with the right revenue model, high RPM niches like finance and crypto carry a significant hidden danger: federal legal liability. Many creators believe that a "not financial advice" disclaimer protects them from the consequences of recommending specific stocks or coins. It doesn't. The SEC's three-pronged test identifies illegal advising. First, are you providing advice on securities? Second, are you being compensated via ads or sponsors? Third, are you in the business of advising? Meeting all three is illegal, unless protected by the publisher's exemption for financial media. To qualify, content must be broad and strictly impersonal, reaching the general public. You can explain how an economy works, but you cannot give personalized advice to a specific person. This means you cannot offer one-on-one portfolio coaching or answer specific investment questions in your comments. Doing so breaks the impersonal requirement of the exemption. In high RPM niches, monetizing audience trust too deeply turns you from a media creator into an unregistered financial advisor. Keep it impersonal to stay protected. The key to a sustainable channel is matching your current resources to the right operational path. Short on time, the optimizer model uses faceless tech tutorials and affiliate links. It scales easily with zero SEC risk, but demands expert editing. Alternatively, the expert model uses a 30% hybrid presence to build trust and stay within the publisher's exemption. You'll earn much more per viewer, but you lose the anonymity and the speed of a fully automated team. For those just starting out, the best path is to ignore AdSense. Pick a narrow sub-niche and offer a simple problem-solving template from day one. This requires learning product design and copywriting up front, rather than hoping for a viral hit to pay the bills. A durable YouTube business isn't built on luck. It's built by deciding which bottleneck you are most equipped to handle: your production time, your audience trust, or legal compliance.